Mohamed, I'd like to ask you a little bit about this meeting tomorrow. It's a very fine line. It's a balancing act, really, isn't it, for Mr. Trichet at the moment? But will he hold this line, or does he need to say, look, I'm going to have to raise rates with the pressure that's on him at the moment?
I suspect what you're going to see, Andrea, is that he's going to speak tough, but that they are unlikely to raise rates tomorrow. And there's a reason for that. Europe is not a single economy. Europe is very much a two-speed economy. And the periphery of Europe, and in particular the Ireland, the Spains, the Portugal, the Greece, cannot easily absorb an interest rate hike. So that the ECB has to somehow find a way to do two things. First, navigate through this multi-speed dynamics and find a monetary policy that accommodates both a strong core and a weak periphery. And second, it has to find a way of conducting both monetary policy and support for the banking system. Because of these uncertainties, because of what you call this fine balancing act, I suspect we're going to hear tough words, but we're not going to get action as yet.
Let's talk a little bit about the weak periphery. There have been commentators saying that Spain's really improving. Are they at a stage yet where you would consider buying Spanish debt? Have you already done that, or is that something that that you can see on the horizon?
You know, we say Spain is not Greece, and it need not be Ireland. Spain is not Greece in the sense that it doesn't have a public debt problem. What Spain has is a banking issue, and in particular the saving banks, the cajas, that are a contingent liability on the public finances. So Spain has two choices. Either it does what Ireland did, and it takes over the liabilities of the banking system, and we find that it contaminates its public finances, or they embark on a different road, which is they try to force as many savings banks as possible to raise capital, to merge, to get the act together. What we're seeing is Spain is embarked on this second way. Spain is trying its utmost to push its financial system to recapitalize using the private sector. Because of that, you've seen Spain significantly outperform Portugal, Greece, and Ireland. Our inclination, if you like, is that you're going to continue to see that trend. And as long as you don't get a major negative shock, Spain need not be Ireland, and certainly is not Greece.
That's very interesting. When it comes to Ireland and Greece, is their debt something that you would consider buying at this stage? I know that you've been involved in covered bonds in Portugal recently.
No, we wouldn't look to buy unsecured debt in Greece, Portugal, and Ireland. And there's a reason for that. So far, the approach to their solvency and growth challenges has been to pile new debt on top of old debt. They have taken a liquidity approach to a solvency problem. Now, history tells us that there's a limit to how long this can work. You cannot solve solvency issues and you cannot solve growth issues by simply adding liquidity. You have to, at some point, you have to deal with the underlying issue. You have to deal with the debt overhang. So we'd rather stay on the sideline until these countries are both willing and able to confront their problems, and at that stage, we would consider buying their bonds.
Very interesting, because of course those underlying issues are due to be addressed. When the EU leaders meet later this month, the promise is to sort out the long-term future. What would you need to see specifically? What do they have to do to convince people like you that it is really time to get involved?
Couple of things. First, an orderly, preemptive, and voluntary restructuring of the debt. Something that we've seen in other countries like Uruguay, whereby you reduce the debt stock through an orderly mechanism. That's the first condition. The second condition is a set of structural reforms that allow these economies to grow over time. So we are waiting, we have a checklist if you like, and we are waiting to see policy action that address both the debt overhang and a growth deficit. If we see that, we would get involved again.